First, let us see what is going in the economy. Looking at all this news makes me feel uncomfortable. The economy is crashing at a record pace. The world economy is expected to shrink by 5.2%, and we are just in mid of the year. US GDP to shrink by 40% in the second quarter. US unemployment is at a record high, almost like 20%, while the Great Depression of the 1930s had unemployment of 24%. Retail sales dropped to negative 16.4%, meaning people are not buying. Consumer spending confidence is lowest since 2012. The personal saving rate is increased to 33%, which means that people are not spending, instead they are saving most of their money. If more people save and not spend, then there will be an economic slowdown, because if people don't spend money, then the businesses don't make money. If businesses don't make money, then the business will have to fire employees to manage their costs. If people are fired, then they won't be having money to spend on things they need. Therefore, the cycle will get ceased. If more and more people start saving rather than spending. All the money given by the Federal Reserve Bank to millions of Americans through the CARES Act was to increase people's spending. Millions of people are out protesting for justice of George Floyd's death amidst a virus outbreak. And millions of people are getting infected due to the virus. Many are dying. The vaccine is still under development, but we are not sure if we could find one. All these negative news, but the stock market is tanking record highs, eliminating the down of 23rd March 2020. Look at these images. The nasdaq hit a new high. S&P 500 is now trading positive, while Dow Jones rallied 450 points. Unbelievable, right? S&P 500 is approximately 48% high from its low in March 2020. Nasdaq Composite is 10.6% up this year. Dow Jones is 51% up from its low in March 2020. This makes us feel like the stock market has entered the bull territory and the economy has entered into recession. Those who have invested after 23rd March 2020 would have made lots of money. All the losses during the month of March would be wiped out by the end of June if the market keeps going up. So, why is the stock market going up and the economy going down? The answer is the Fed, stimulus money, bailouts, and tech stocks. The Fed, which until 2020 didn't have the right to trade in the market, can now buy junk bonds. The unlimited money printing machine had made the Fed save Wall Street and make stocks reach record highs. The bailouts by the Fed have helped the airlines and many banking industries to save themselves from bankruptcy. And the tech stocks, or FANG, meaning Facebook, Amazon, Apple, Netflix, Google, and Microsoft. These stocks are gaining a record pace. They constitute about 12% of S&P 500. All that said, we should know that the Fed is the ultimate savior of the Wall Street. Without Fed, there would have been the worst market crash. But one question still boggles my mind. All these bailouts and stimulus by the Fed. Until when? The answer to this question is still unknown. Thank you for watching. Please share this with one friend. Also, make sure to subscribe.